Welcome back, folks. We had the Dow finished down 62, NASDAQ off 11, S&P's off 6.5. And as we do each and every Monday, folks, at 35 past the second hour, we have our man, Mr. J.J. Kinahan. J.J., folks, is, with thinkorswim TD Ameritrade. You can see him at least a couple times a week on CNBC analyzing these markets. Now, if you haven't test drove the thinkorswim platform yet, folks, come over to our website at TFNN. You're going to see the banner right on the very top. You'll see one on the side. Hit that banner. You can test drive it right here, right now. I use it each and every day. And, folks, on one platform, you can trade futures, you can trade equities, you can trade currencies, and you can trade options. It's all on one platform. It's a beautiful thing. Since, yesterday was St. Patrick's Day, it's a green and white banner, folks. It's a beautiful thing. JJ, what's happening?
Happy St. Patrick's Day, Tom.
And to you also, man. And to you also. Hey, I gotta tell you, first off, last week, of course, when the Dow was making highs every time, and folks, the times that the times that he's going to be on is either 20 past or 20 of the hours, whether it's the 6 o'clock or 7 o'clock hour. That's how it normally is. But I saw them; they were trying to because the Dow was going up every day. JJ, I saw him say, "Well, hey, listen, we're going to go higher. We're going to go higher, right?" And you wouldn't bite. It was really good because you start explaining to them about the option expiration, man.
Well, it was, last week it was kind of a not as interesting a week, obviously, with the Cyprus situation. But one thing to keep in mind with Cyprus, it's the size of Connecticut.
Yes.
But their banking industry is so big, it would be the equivalent of about 37 J.P. Morgans in the state of Connecticut. So it just gives you an idea of the impact there.
Well, that's a great analogy, man, because
in terms of market movement and volatility and one thing, Tom, I know you know all about it, but some of your listeners may not know as much, is we had a new product today from the exchanges, mini options. It's only in 5 names, Apple, Google, Amazon, GLD. Yeah, I know one of your favorites.
That's a beauty.
And the Spider.
Okay.
And what mini options do is they allow a normal option, as you know, is based on 100 shares.
Yes.
A mini option is based on 10 shares. So for your listeners who have maybe a smaller account or aren't as familiar with options and don't want to do that, bigger capital outlay,
yes,
it's a great place for those folks to get started, Tom.
That's going to be amazing. I mean, that is a great product. There is no doubt. Particularly what happens, folks, is that inside, when they first started these weeklies, bottom line, it keeps bringing the spreads down. But now what does happen, as JJ just said, it also allows them, to be in a couple different products, right? Instead of just that one product, so they can spread basically their risk across the board. And that's kind of how they started the weeklies, right? So they start 5 stocks first, and as long as it's successful, they'll start more probably, right?
Right. The one thing about the minis that I do think they will do is, if you noticed, all the stocks that I talked about trade over $100 and some significantly over $100. So I think that it'll stay toward that target market, so to speak, Tom, where the stocks are higher priced. So again, they're trying to be retail. It's a product that really was designed with the retail trader in mind, and so it allows those, again, with smaller accounts who want to be involved with Apple, but they don't want it to be perhaps such a big percentage of their portfolio. Which, hey, you talk about diversifying all the time, Tom. This is a great way for people with smaller accounts to actually diversify because they can trade less part of their account and still be involved in the market.
This weekend, JJ, I was out in California doing a workshop, and I was with a couple of guys that you know really well from Chicago, and we were talking about how options basically really have taken over the whole market. And what I mean by that, folks, is that because the spreads have come down so dramatic, and people just understand them so much more now, right? And
no doubt.
Yeah, I mean, and it's amazing, folks. And, we're only looking back like 15 years. I mean, you don't have to look back 15 years. We happen to be doing that, okay? But it's really important to understand, folks, that you can turn it around, and whether it's the SPY, whether it's the Q, whether it's the Diamond, instead of putting up huge amounts of margin money, you're talking about penny-wide spreads, which is just unbelievable, And
to back up your point, Tom, From 2011 to 2012 was the first year that we did not have a significant percentage growth in options over the last 11 years.
Okay.
10 years before that, options grew at an annual rate of 19% year over year. That's crazy. Nothing grows like that.
No, there's no doubt, because the difference, as we just said, it has to do with the amount of money and the options also, folks, well, not all of them, but many of them can be defined risk, meaning if you're putting spread positions on, and if you listen to the program, folks, each and every Tuesday, 12 to 1 Eastern Standard Time, and the program, folks, is free. People are paying $2,000, $3,000 for an education that you're going to get excellent education off TD Ameritrade for free. The key that they understand, because they trade and have been doing this so long, is that they're teaching strategies. JJ, the difference in teaching a strategy versus, the buy a call or buy a put is just amazing. I mean, we know that you have to know strategies, but I think your clients, I mean, they're some of the best educated clients out there, right?
Well, we certainly do everything we can to make sure they are, Tom, and I think you touch on something important, and you and I have talked about it before, but I think it always bears repeating. One of the biggest differences between somebody who's just starting out trading and somebody like yourself who's a professional trader is the professional, the first thing they say is, how much can I lose?
Yes.
Find a way to mitigate their losses. Whereas the newbie says, how much can I make, and lets losses run too long. That's why we always talk about defined risk trading, Tom.
Yeah, no doubt. Folks, come over to our website right now. Now, listen, folks, you can test drive the platform for free. And you can get up there, you can paper trade it, you can do the whole ball of wax. You do it right now. As the show is on tomorrow, as Victor Jones is setting up some trades, you can be basically looking at them, seeing how it would work for you. JJ, you have a great night, safe night. And, of course, folks, you'll always catch them on CNBC. You'll be analyzing that market, letting them know where that option market's going, where that premium's going. Listen, man, you have a great one, a safe one, JJ.
Always a pleasure. Thank you, my friend.
Also, man, have a great one, man. Have a safe one.